Good morning, Dr. Go. Today, my group member and I will be presenting the financial report of Kerjaya Prospect Group Berhad, covering the period from 2020 to 2024. This report will highlight key financial trends, analysis, and recommendation for the company future growth. This is our group member. The group member got me, Yong Wei Lok, and Lam Pei Wen, Abdul Haziq, Wan Rosinda, and the last one is Noor Rumaisha Abdi. This is our table of content. In this slide, we have the executive summary, company breakout and business profile, company financial reporting from 2020 to 2024 overview, and analysis financial statement, company ratio analysis, recommendation, and the last one is the conclusion business profile.
Good afternoon, my name is Norma Shadinin, binti Khairul Azwan. My metric number is AP220406, and I presenting financial report of Kerjaya Prospect Group Sdn Bhd financial performance from financial year 2020 until financial year 2024. We're looking at the company revenue growth, which has increased from 824.5 million ringgit in financial year 2020 to 1.84 billion ringgit in financial year 2024. Alongside this, net profit also saw improvement, rising from 90.76 million ringgit in 2020 to 160.2 million ringgit in 2024. In addition, we touched on the company's strategic growth initiative, focusing on its role in the real estate sector, particularly affordable housing and mixed-use development in Malaysian urban expansion. Lastly, we will discuss Kerjaya Prospect Group Sdn Bhd strong capital structure, which is support its continued investment and expansion opportunities. In 2018, Bursa Malaysia ranked it as a fourth best construction counter, highlighting its strong market performance. With a focus on innovation, quality, sustainability, and client satisfaction, Kerjaya Prospect is committed to being a trusted leader in the industry, known for its excellence in high-rise commercial and mixed-use projects.
Now, let's see the company financial report from overview 2020 year to the 2024 year. Now, let's look at the Kerjaya Prospect revenue performance. From 2020 year to 2024 year, the revenue grew steadily from 824.5 million to 1.84 billion, more than double in 5 years. The biggest jump happened between the 2020 year and 2023 year, mainly due to successful project execution and expansion efforts. This strong growth shows Kerjaya's leadership in the construction sector and its ability to meet rising and market demand. Here, we can see the trends Kerjaya expenses from 2020 year to 2024 year. Expenses dropped from 47.7 billion in 2020 to low of 34.2 million in 2022. However, from 2022 year to 2024 year, expenses started to increase again, mainly due to expansion activity, inflation, and operational costs reaching 50 billion ringgit in the 2024 year. Overall, even though expense raised, the company maintained strong profit margins because revenue growth was even higher. Next, let's look at the company net income. Net income increased steadily from 90.8 million in 2020 year to 160.2 million in 2024 year. The strongest growth started from the 2021 onwards, reflecting Kerjaya increasing profitability. This growth clearly shows that the company business strategy were effective and that it has maintained strong and sustained financial performance over the 5 years. The slide shows the company total assets from 2020 year to 2024 year. From 2020 to 2022, assets growth was relatively slow, increasing modestly from 1.36 million to 1.42 billion. However, in 2023 year, we see a notable rise to 1.64 billion, followed by a sharp jump in 2024 to 2.23 billion, an increase of 806 million in just 1 year. This indicates a strong financial position and reflects the company's significant business growth. Now, let's look at the company total liability from 2020 year to 2024 year. From 2020 to 2022, liability steadily declined from 379 million to 297 million, indicating effective debt reduction during the period. However, in 2023 year, liability rose sharply to 481 million and more than double in 2024 to 1.09 billion. This significant jump suggests a strategic shift, possibly toward expansion, increasing borrowing, and major investment. This slide shows the shareholder equity from 2020 to 2024 year. We observed steady growth from 982.7 million in 2020 to 1.16 billion in 2023, reflecting a strong and consistent financial base. In 2024 year, there's a slight dip of about 9.3 million, but overall, the trend remains positive. This indicates general healthy equity growth with the company maintaining a solid financial position. This slide shows the return on equity ROE from 2020 year to 2024 year. As you can see, the ROE has shown steady growth over the 5-year period, starting at 9.24% in 2020 and rising to 14.10% in 2024. The biggest increase allowed in 2024, marking a significant improvement in the financial performance and efficiency in generating profit from equity. Okay, now looks at the earning per share from 2020 to 2024 year. We can see a clear upward trend starting at 7.37 cents in 2020 year and reaching 12.71 cents in 2024 year. The company has shown a consistent year-on-year growth with the highest EPS record in 2024 year. This reflects strong profitability and improvement in how effectively the company generates EPS. This slide shows the price-earning ratio from 2020 to 2024. We can observe a steady decline from 28.90 in 2020 to 16.76 in 2024, representing a total drop of over 12 points in 5 years. This indicates that the stock has become cheaper relative to its earning. This may be due to factors such as slower earning growth, market uncertainty, or lower investor confidence. It's worth noting that in 2024, with an EPS of 12.71 cents and a stock price of 2 ringgit 13 cents, the PE ratio reflects a more cautious market outlook despite strong profitability.
Hi. So now it's my turn to discuss about the analysis of financial statement. They include the first one, the horizontal analysis, the second one, the vertical analysis, and then the third one, trend percentages. So first is about the horizontal analysis. The dollar change is equal to the current year figure minus the base year figure, and the percentage change equal to the dollar change divided by the base year figure multiplied by the 100%. So the table below show the horizontal analysis of the Kerjaya Prospect Group balance sheets at 31 December from year 2021 to year 2024. As you can see, the total of the intangible assets is decreases from year 2020 to year 2024. And the percentage show that the horizontal the percentage of the intangible assets in year 2024 to 2023 is 1.08%, and in 2023 and 2022 is 0.38%. In year 2022 and 2021 is 0.47%, and the last one 2021 and 2020 is negative percentage. And to the total assets is also but for the total assets is increased from year 2020 to year 2024. As you can see, the percentage in 2024-2023 of the total assets is 36.03, and the percentage of the total assets in year 2021 and 2020 is only 7.28. So there is a growth and decreases of the percentage in total assets. And let's come to the equity and liability. The total equity from year 2020 to year 2024 also increases. As you can see, the percentage is from in year 2021 and year 2020, negative 8.35% increases into negative 1.5%. And in last, the total liabilities in year 2020 to year 2024 also increases. The percentage is from negative 3.84% in year 2021 and year 2020 increases into total 120 and 26.25% in year 2024 and year 2023. So in conclusion, the total equity and liability of in year 2020 also increases and from 2020 to year 2024. So then that means there is the crisis baseline in year 2020, and then in year 2021 is start of recovery, and in year 2022 is a full recovery and growth. And in year 2023 is operational stability. In year 2024 is a financial maturity. So the second is about the vertical analysis. The percentage change is equal to the individual item divided by the reliable total and multiple with 100%. Here the table below show the vertical analysis of Kerjaya Prospect Group Berhad balance sheet at 31 December from year 2024 to year 2021. So let's start with year 2020. There's a conservative financial base. This because the intangible assets is 23.92%, and the trade and other receivables is 23.45%. The cash and bank is 17.91%, and the capital structure include the equity at the 6.15%, the liabilities is 13% total with the low current liabilities 2.13%, and the focus on this because they focus on the liquidity and stability during the COVID-19. In year 2021, there is stabilization phase. This because the core revenue is 1.12% and the liabilities is 7.7%, and the long-term assets is 2.75%, and the residual exceptional expenses is 0.02%. So they focus on lean operations and preparing for post-COVID scale up. In year 2022, there is an improvement of internal efficiency. This because the core revenue is 1.06% and the other income is increased in 0.08%. The long-term assets slightly lower 2.68%, and the working capital is dropped to 7.37%. There is a sign of diversification, better allocation, and reduced strain. In year 2023, there is a consolidation and assets expansions. This is because the trade receivables is 52.07% and the intangible assets is 13.94%, and the PPE is 5.65%. The cash and banks 6.37%, and the contract assets 2.67%. The return profits is 29.1%, and the total equity is 70.51%. So there's a strong internal funding and low financial leverage. And in year 2024, there's optimizations and self-sufficiency. This because the trade receivables is 50.58%, and the cash and bank is 7.79%. The intangible assets is dropped to 10.24%, and the PPE is 4.5%. The return profit is 20.58%, and the total equity is 51.04%. The contract liability surges to 27.71% and reverts the forward billings. So this marks the peak investments and balance in capital structure. So in conclusion, there is a strong shift from equity heavy in year 2020 to optimize the assets liability mix in year 2024. Besides, there is continuous improvement in income, diversification, and capital efficiency. Furthermore, there is a rising liquidity and steady reduction in liabilities highlight sustainable growth. And last, there is vertical trends reflect financial discipline, operational maturity, and the strategy reinvestment. And the last one is about the trend percentages. The trend percentages is equal to the current year amount minus the previous year amount divided by the previous year amount and plus the previous year trend percentage. So, and below is the table about the revenue, the percentage trend of revenue, the expenses, the percentage of trend of revenue, the net income, and the trend percentage of net income in year 2020 to year 2024. And the graph above is about the trend analysis. So first is the revenue growth in 2020 to 2024. This because there is steady growth from 824.5 million ringgit Malaysia in year 2020 to 1.84 billion ringgit Malaysia in 2024. Besides, there is the sharpest increase in year 2023 that 31.2% due to the successful project execution or expansion. Next, there's the growth continue in year 2024, which is increased 24.6%, showing the strong demand. Secondly, there is an expenses growth in year 2020 to year 2024. This because the expenses grew in line with revenue, which is 695.2 ringgit Malaysia million in year 2020 into 1.59 billion ringgit Malaysia in 2024. Besides, there is the peak expense growth in year 2023, which increased 34.7% and linked to the large projects or investments. Next, the expense growth matched the revenue in year 2024, which 24.6%. This indicating the good cost control. Furthermore, there is operational efficiency. This is because in year 2021 to year 2022, there is a revenue growth slightly outpaced expenses that reflecting the improvement of efficiency. For example, in year 2021, the revenue is increased 18.5% versus the expenses that increased 17.9%. In year 2022, the revenue increased 14.8%, whereas the expenses increased 15.4%. And in year 2023, there's a temporary margin squeeze as expenses grow slightly faster than revenue. So for the overall performance, there's a healthy project profitability despite occasional margin pressure. Then the sound financial discipline and sustainable operational scaling, and the strong net income growth supported by the effective cost management.
Good morning, everyone. My name is Wanasinda binti Wan Samsudin, the metric number AP220181. Now I will present about the part 5.0 company ratio analysis. It divides in three parts, which is asset management ratio, profitability ratio, and the debt management ratio. First of all, for the asset management ratio, we selected the Kerjaya Prospect Group Sdn Bhd company for the analysis 2020 to 2024. For asset management ratio, it is a financial indicator that shows how efficient a company is using its asset to generate revenue. In construction, this ratio is important because it reflects how well the company can manage its resources, machinery, and material over time. Based on the data, the ratio in 2020 was 0.62. It's then increased steadily each year, which is 0.71 in 2021, 0.80 in 2022, and reached 0.96 in 2023, which is this consistent increase indicates that the company was becoming more efficient in using its asset year by year. However, in 2024, the ratio dropped slightly to 0.995. Although this is a small dip, it may signal a need for the company to reevaluate how its assets are being utilized. This could be due to the changes in asset investment, slower project turnover, or external economic factors. So, for the conclusion for this part, overall performance from 2020 to 2024 shows that the company was improved in its asset management significantly, with only a minor decline in the final year. Next, I will present about the profitability ratio of the company from 2020 to 2024. Profitability ratio is measures the company ability to generate profit from its operation. It is one of the most important indicator of financial performance, especially in the construction industry, where profit margins can be affected by the project delay, cost overrun, and material price fluctuations. From the data, we can see that the profitability ratio started at 0.11 in 2020. It gradually declined to 0.10 in both 2021 and 2022, and then further dropped to 0.09 in 2023, where it remained steadily in 2024. This gradual increase from 2020 to 2023 suggests that the company was facing challenges in maintaining its profit levels. Possible reasons could include the rising construction costs, increased competition, or reduced project margin. However, the stabilization in 2023 and 2024 indicates that the company has managed to control the decline and maintain a consistent profit level, although at a lower margin. To summarize this part, the company needs to find ways to improve the profitability, perhaps by reducing overhead costs, or improving project planning, or securing more high-value contracts. Now, for the last part is the debt management ratio. I will explain about the debt management ratio for the company from 2020 to 2024. The debt management ratio shows that the extent to which a company relies on the debt to finance its operation. In the construction industry, managing debt is crucial because high debt level can increase financial risk, especially during the economic downturn or project delays. Looking at the figures, the ratio was 0.39 in 2020, and it decreased gradually to 0.36 in 2021 and 0.27 in 2022. This decline indicates that the company was reducing its dependence on debt, which is generally seen as a positive sign for financial stability. However, in 2023, there was a sharp increase to 0.42, and it rose significantly again in 2024 to 1.00. This sudden jump could mean that the company took on a large amount of debt, possibly to finance new projects, purchase assets, or cover operational costs. While this might support short-term growth, a debt management ratio of 1.00 is quite high and could indicate financial pressure if it is not managed carefully. The company should monitor its debt level closely to avoid the repayment issue in the future. In conclusion, the company went from reducing its debt to aggressively increasing it in recent years, which may signal on a shift in financial strategy or operational challenges.
Assalamualaikum warahmatullahi wabarakatuh. My name is Abdul Hazib bin Abdullah. My nometric number is AP220352. Today I want to discuss about recommendation. Based on the financial performance analysis of the Kerjaya Prospect Group Berhad from the 2020 to 2024, service recommendation can help the company sustain its growth and improve the financial stability. Firstly, the company should be managed its liabilities more carefully. The sharp increase in the debit in the 2024 call from the more conservative financial approach to ensure debt repayment does affect cash flow. Secondly, income. This diversification is currently, although the profit have increased, the company should explore opportunity beyond the construction, such as green technology, infrastructure, project of the maintenance service to reduce risk from the market dependency. Third, operations efficiency must be improved by adopting digital system and ERP solution. The company can optimize its user asset and boost productivity. Next, every investment should be carefully evaluated. A proper risk return analysis will help ensure the capital is used for the project with long-term benefit. In addition, better communication and transparency with the investor will help the increase confidence and reduce share price volatility. Lastly, the investing in human capital is essential. Training and upskilling employee can help improve work quality and keep the company competitive in the construction industry. In conclusion, despite the challenge of the COVID-19 pandemic and global economic uncertainties, Kerjaya Prospect Group Berhad has shown solid financial performance from 2020 to 2024. The company recorded strong growth in the revenue and the net profit, with revenue more than doubling from RM 824.5 million to RM 1.84 billion. Its effective asset management and stable profitability ratio show that the company is operating efficiency and making good use of its capital. Although liability increased in 2024, this can support future investment as long as the debt is well managed. Overall, Kerjaya Profit is financially stable, forward-looking, and well positioned from continuous growth in Malaysia construction and development industry. That's all. Thank you.